Hello, has anyone ever thought about this? Has anyone ever wondered that if China can produce goods that are extremely cheap and in massive quantities, wouldn't that be a significant and serious threat to the global economy? Thailand has gone through this exact situation in the past, right? There was a lot of recent news about cheap Chinese products flooding into the Thai market. There was even someone who came out and declared that the faster China's economy grows, the more it becomes a threat to the global economy. The person who said that the faster China's economy grows, the more it threatens the global economy, is none other than Janet Yellen, the US Secretary of the Treasury. Bloomberg even ran a headline saying that Janet Yellen, the US Secretary of the Treasury, is not at all happy about how China's industries are growing fast, growing strong, and in a way that's just not fair. Janet Yellen said that no other government in the world supports its domestic industries as much as China does. China is the country where the government supports its industries the most, more than anywhere else in the world. Janet Yellen said this will give Chinese factories a huge advantage, right? They'll be able to produce goods at lower costs than elsewhere. They can manufacture products more cheaply than anyone else, and they can also produce more than anywhere else. So when these products are exported out of China, exported all over the world, and in huge quantities too, it ends up driving down the prices of similar products. And that makes it unfair for other countries. They just can't compete. Mainly, it's the United States that's saying it's not fair at all. They just can't compete. But honestly, China has been a country that's produced and traded industrial goods since way back in the day, ever since they started opening up the country, right? I mentioned before when talking about Chinese stocks that China has been producing industrial goods for a really long time. And China just kept growing and growing, and it got huge, right? Until the years of 2017 or 2018, when former President Trump announced a significant and intense trade war with China. Do you remember that, if you can recall? They didn't want China to have any more unfair advantages in global trade. At that time, Trump explicitly said that China was engaging in all sorts of unfair practices. They were devaluing their own currency. Trump called the period when China was devaluing its currency an artificial low, or a fake low, because the government was manipulating the currency and it wasn't following the rules of fair competition. And when the currency is weak, China gains a trade advantage, right? It's just like this time. Janet Yellen said that the Chinese government is supporting its industrial sector too much. But honestly, since 2017 or 2018, after the trade war was officially announced, things have been pretty stagnant for a while, right? Do you know why all of a sudden the United States is getting upset, saying, hey, China's economic growth like this is just not okay for America? It's primarily because the Chinese industries that are experiencing a massive surge in growth right now are in the advanced high technology industrial sectors. And this is directly challenging American dominance and stepping right on their toes, big time. It's a matter of overlapping markets, because everyone knows that the US stock market grew by 25% last year. But what was really driving that growth? That growth came from the Magnificent Seven, which are the 7 tech giants, Microsoft, Google, Apple, Nvidia, and so on. They're all tech stocks that drove the US stock market up. And it's something that's been talked about for a long time. America is the only country in the world that truly has high technology and has built such a massive empire. No other country has been able to do what the United States has done, like having Silicon Valley with so many investors pouring in money and all that. But today, China has managed to do it too. And they're about to achieve even more than this. That's why the United States isn't happy about it. Let's take a look at this graph. It's a graph of China's industrial sectors showing how quickly they've grown. They've been growing continuously, right? And it's almost like a vertical line. Since 2020 up until now, the growth has been incredibly fast. China has also announced that by 2030, it will be a leader in high technology, whether that's humanoid robots, AI, maybe even chips, EVs, or solar. And all of this is stepping right onto America's turf. And most importantly, as everyone probably already knows, especially if you follow financial news, China has had a major problem with its real estate sector collapsing. Starting from Evergrande, Country Garden, and others, they've all come crashing down. And there's still a tendency for this to drag China's economy down even further, because when the real estate bubble burst and collapsed, it pulled the Chinese stock market down with it, making a huge mess. And for 3 years in a row, boom, 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 the Chinese stock market has just kept crashing hard. And this has caused capital inflows into China to just keep dropping and dropping until they're actually negative. Even FDI, foreign direct investment, has almost hit rock bottom. But like I mentioned before when talking about Chinese stocks, China is a country that always has a hidden card up its sleeve. No one really knows whether China has money or not, or just how much financial firepower they actually have. Even when their stock market crashed hard in 2023, the yuan stayed stable because the Chinese government kept the currency pegged. Here, take another look. This is the graph of foreign exchange reserves. When they pegged the currency, the reserves dropped all the way down to the floor, right? But then in 2024, the bars suddenly shot up. Where did that come from? After the reserves had dropped all the way to the floor, how did they suddenly jump up to such a high level? It got to the point where Bloomberg even reported that the foreign reserves came in so unexpectedly, it's suspicious. Up to 3 trillion US dollars. Earlier, we talked about how China's real estate sector collapsed, right? Yeah, and that actually happened at the same time as China's tech industry started to rise. Basically, the real estate market began to visibly collapse starting in 2020, right? And the industrial sector has also been picking up since 2020 as well. You can see this clearly from this graph, where the revenue from the high-tech industry sector, the yellow line here, has been trending upward. Right now, the yellow line represents the high-tech industry sector, which is generating revenue at 14.3% of GDP, almost catching up with real estate, which is the black line. See? And what's really important and clearly shows that China is focusing and shifting its attention to the industrial sector, especially high technology, is loans. If you look, the industry that receives the most loans is the high-tech sector. You'll see that compared to 2016, China's high-tech industry has been approved for 7 times more loans. The next line down is the service sector, but it's not nearly as important. What's important here, if you look at this, the pink line at the very bottom represents the real estate sector, which this year hasn't received much in loans because it's no longer a key industry for China. So when people say that China is stuck in a real estate trap, you can clearly see that this is China's new plan, focusing on the high-tech industry. Now, if you ask what areas China's high-tech industry is focusing on, well, here you go, EVs. Chinese electric vehicles are cheap. I don't know if they're good or not, but they're stylish and sell really well. BYD has already overtaken Tesla. And there are a bunch of other Chinese EV brands getting ready to launch too. And they're honestly really cheap. But again, I can't say for sure if they're good or not. So just a little side note, if you're thinking about investing or buying an EV, if you're not in a hurry, maybe wait a bit. Maybe it's better to wait until the price war settles down and things are more stable before buying. Otherwise, if you buy now, the price just keeps dropping. Think about the people who were the first to buy a Tesla. By now, the price of Teslas has really tanked. Another thing that China focuses on is batteries, and I actually have an example, solar panels. Solar panels are a perfect example of what Janet Yellen was talking about. When China can produce a lot and at a low cost, it drives down prices in other countries. Take solar wafers, for instance. Just 1 year ago, a solar wafer cost $1. But by 2024, China was able to produce a lot and at a low cost. That made the price drop by as much as 80%. Wow, solar cells dropped by 80%. It's only 20 cents now. That's why Janet Yellen came out and said this is exactly the point where it hurts companies in the US and also in Europe. Because in America, there aren't any. No one can compete with China's competitive edge. And Janet Yellen also said that it's not just the United States that's unhappy with how much the Chinese government supports its own industries. The EU isn't happy either. Recently, the EU has requested an investigation to see whether the subsidies from the Chinese government to China's EV industry are actually legal. They want to look into it. Can they really investigate? I mean, asking to investigate China? So after hearing all this, what do you all think? Do you believe China's economic growth is actually a threat to the world? Or is it just their own business? Or what should we do? One thing's for sure, we really need to keep a close eye on this. If the United States starts getting unhappy with how fast and aggressively China's industries are growing, especially when they start overlapping with America's own high-tech sector, will there be a second round of the global trade war coming very soon? Follow all the latest financial stories with Sai on the Money Monster channel. Thank you so much for watching today.